Welcome to V2U Research. It is Wednesday, May 6, 2026, and today we're breaking down a pivotal session for the Australian market. We have a lot of ground to cover. The S&P ASX 200 index closed at 8,793.60, gaining 113.10 points or 1.30%. This follows a period of heightened volatility and reflects a strong return of buyer confidence. Looking at the broader trend, the index has gained 1.23% over the last 5 trading days, clawing back losses from the previous week as global sentiment stabilized. However, despite this recent rally, the index remains virtually unchanged year to date. This horizontal movement underscores the tug-of-war between growth and inflation concerns. Sentiment locally was heavily boosted by a solid rise in US stock futures after Wall Street hit fresh record highs overnight. Aussie investors took their cues from New York. The global rally was fueled by major geopolitical shifts. President Trump signaled that a comprehensive deal with Iran was close, potentially resolving years of diplomatic tension. Crucially, the administration announced a pause in naval operations in the Strait of Hormuz. This immediately eased concerns over global oil supply chains and transport routes. With the global backdrop set, let's shift our focus to the charts. We need to look at the specific levels that are dictating the current price action for the ASX 200. From a technical perspective, the index continues to hold firmly above the key support zone near 8,183.2. This level has acted as a floor multiple times this quarter. On the flip side, near-term resistance is located around 9,200.9. This is the ceiling that bulls need to crack to signal a new leg of the long-term uptrend. The Relative Strength Index, or RSI, is currently sitting at approximately 51.91. For technical traders, this suggests a neutral to slightly bullish momentum. A reading above 50 indicates that the average gain is higher than the average loss. Being so close to the midline, it shows the market is balanced but leaning towards the bulls. We are essentially trading within a well-defined range. Savvy investors are watching for a high-volume break of 9,200.9 or a defensive hold at the 8,383 support. Moving from the charts to the bank, the Reserve Bank of Australia raised interest rates for a third straight meeting on Tuesday, a move that caught few by surprise. The rate hike was in line with market expectations. However, the tone of the accompanying statement was notably hawkish, highlighting ongoing inflationary pressures. The RBA warned that higher fuel costs from the Middle East conflict risk creating second-round inflation effects. This is when high energy prices start to push up all other goods. This is the nightmare scenario for central banks. If transport and logistics costs stay high for too long, they become embedded in the price of everything from bread to tech. Sector performance during the session was remarkably mixed. In fact, more sectors ended the day lower than higher, despite the overall gain in the S&P ASX 200 index. The materials sector was the standout performer, gaining 2.48% for the day. This brings its 5-day gain to nearly 1%, leading the broader market's recovery. Financials also saw a strong bounce, rising 2.39%, while industrials added 1.13%. These sectors benefited from the improved global outlook and local rate clarity. On the flip side, the energy sector was the worst performer, correcting lower by 2.05% as the news of a potential Iran deal eased the geopolitical risk premium on oil prices. Telecommunication services also struggled, falling nearly 1%. This highlights the selective nature of today's rally, where investors pivoted toward growth-sensitive sectors. Let's get granular and look at the individual stocks that made waves today. We saw some incredible gains and some sharp corrections. Infratil Ltd was the day's superstar, soaring 14.95%. Investors piled into the stock following a series of positive updates regarding their infrastructure portfolio. IGO Ltd also recorded strong gains, rising 6.59%. The mining specialist continues to benefit from renewed interest in the battery metals and green energy space. Conversely, Magellan Financial Group recorded the largest decline of the session, falling 8.93%. The group continues to face challenges with fund outflows. JB Hi-Fi also struggled, falling 6.28%. The retail giant is navigating a tough consumer environment as interest rate hikes begin to bite into household spending. Looking ahead, market participants will be laser-focused on the upcoming US crude oil inventories report. This is a key piece of the global inflation puzzle. This data tracks the change in the number of barrels of commercial crude oil held by US firms. These inventory levels are a primary driver of petroleum product prices globally. When inventories are low, prices tend to rise. Higher petroleum prices increase the cost of doing business globally, which has a direct and lasting impact on inflation data. At V2U Research, we believe that understanding these global connections is essential for domestic success. We cut through the noise to give you the data that matters. Whether you are a daily trader or a long-term investor, our research products are designed to provide clarity in these volatile times. Join our community for deeper insights. If you found this ASX market wrap useful, please like this video and subscribe to the channel. Turn on notifications so you never miss an update or insight. We want to hear from you. Share your stock watch list in the comments below and let us know where you are investing. Thank you for watching V2U Research.
The information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.